Felix at the team.
Gentlemen, welcome back. What is it? July 19th. We got another chart talk on deck. We got some blood in the street. So let's get right into this market outlook. Flat out. So we've been saying the last few weeks, we've seen so many cracks under the hood. We've been talking about how, the market's at all-time highs, but over 60% of stocks are trading around their 50-day moving average, maybe even below it. Things like that signal us that it's very weak participation. We were being led up by the mega cap tech stocks like Amazon, Facebook, Google for so long. And now finally we're seeing that weakness spread out to the broad market. So, we take a look around, look at the SPY, close right at this upper trend line right here, down 1.5% on the day. Qs, not so bad. They turned around. They've been relatively strong. There's a few names in the Qs that look pretty good. And the IWM, the small caps, they barely held on to support right here. They're actually at a pretty attractive spot right now, coming in 10% off highs, still above the 200-day moving average. The thing is that, in a bull market, we're still technically in a bull market, a 10% move down to the 200-day, that's usually viable. So, I don't think this market's done yet at all. I think there's a lot of, it's still very selective. I think, we still have some more pain to deal with. We take a look over to FinViz, the heat map, and we can tell how bloody it was today. All around, there wasn't a ton of strength. We see the semis were, some strength, and it's consumer defensive, some stuff like that. We saw a lot of the Corona names coming back pretty strong. We got that Delta variant. People are getting scared. Everyone's very reactive. I'm not saying lockdowns are coming, but the market's pricing in something like that. But another positive thing I wanted to look over the fear and greed index, and we're already at 18 on the extreme fear out of 100. So I think we'll bounce at some point this week. If we get it down open tomorrow, I might be looking to buy some things. But overall, I would say it's still very selective. It's still pretty risk off. We got a ton of earnings names coming up. Ben, what are you thinking? I know you wanted to get into some charts.
Yeah, so again, you highlighted a lot of the points. We kind of have a similar outlook, so we can just kind of breeze through some of them pretty quickly. First one up, again, you already went over the SPY. Again, it's still in that overall uptrend. Really, the key level for us is anything above 400 in the SPY is kind of a bonus for us. As long as we can continue to hold above that, we probably should see the market continue to drift higher. But in the short term, again, we probably will see us pull into this kind of upper trend line that we've been on for some time. But if you move over to the IWM, which is exactly what you mentioned before about how it does almost look viable as it comes into major support, this would be one that I would look to buy up through 215.
Oh, nice!
Time.
I didn't see that.
Yeah, so it's just, again, we're not, when you mentioned them, I was going to say basically the same exact thing where it's coming into support. We'll probably see it. It could shake 205, it could shake 200, but on the way back up, up through 205 or 215 for now would be the buyable spot. And if it pushes down to 205, we can find a tighter entry. But for now, that's kind of the spot to keep an eye on if this is, the most of the small caps going to pull down. And then moving on, again, just some chart patterns that we can continuously see. If we move over to the Dow 30, the DIA, we can just see, we always harp on why we look to take profits into the retest, and we get to those times, it typically looks the best, and it's going to go higher. And we're seeing, kind of clear as day where the Dow, retested its prior all-time high, and now it's pulling back into this range. So it's just doing something that we see, over and over again, and we see the same thing in the REITs. If you move over one more chart shake to the VNQ, we can see that, in the REIT sector, the all-time high was 106. That was the all-time high. It pulled back in, started to base versus 101. It ran back up to 106 again. That's that retest. And now it's starting to pull back in, just like the Dow 30. Just here, we're seeing that same pattern. That all-time high runs up to the retest. It's met resistance, and it pulls back in. So there's very common chart patterns we're seeing in a lot of these sectors. Moving over to the biotechs, like Sheikh mentioned, some of these, Corona names might be starting to wake back up. We can see the biotechs have just been flagging, for the past month or two and giving us a nice, buyable trade up through 164, 165 in time for that move back to that retest of 174, like we mentioned with, the REITs and the Dow 30. Continue to move on the flip side, we talk about these H patterns or these bear flags, and we can see one clear as day in financials where there's that initial down move, from 94 down to 87. It has that little reactionary bounce, and it starts to, if you kind of draw it out, form like an H. And then as it takes out that low, you tend to have that breakdown lower, which we're starting to see financials. And we're also seeing the same exact thing in material stocks. So Shake, if you move over one, you'll see that same.
Yeah.
Which one?
I'm on materials. I want to point out something that you mentioned that you didn't even realize you mentioned. So we go back to the Dow 30. It was hit the hardest today, right? And we look at the financials that are hit hard and materials, as you just mentioned. What are all these? Value names. So this is what I'm taking that's good out of the market today is the value stocks all got crushed. We saw the growth stocks and things that have been more weak. We saw them have that relative strength today. So I'm thinking we could be near a bottom for the growth stocks pretty soon, and we could see them lead again, which would be fan-fucking-tastic.
Mm-hmm. Yeah. So again, I'm just focusing more on the chart, but again, as Shake just mentioned, those do all line up exactly. But that age pattern that we continue to see, that's not a pattern you ever really want to buy, especially when it's taking out that lower prices tend to be in store. And then finally, again, we're talking the 10-year for just a brief moment. This is more just showing.
Plays into the growth story. You go, but I'll talk after.
And yeah, I'm just from the chart where we talk about the 4 stages, where there's the stage 1 where the stock is basing, there's the stage 2 breakout, there's that stage 3 topping pattern, and that stage 4 breakdown. And this 10-year has kind of shown us like the most textbook example of this exact pattern that we see virtually with any stocks, where if we looked at materials or financials, they're kind of entering that stage 4 breakdown where stocks like sectors like the biotechs are still kind of in that stage 2 basing,
right,
maybe topping out 3 before if they have that break and move higher. So those are just kind of just some broad chart patterns that we are seeing in these major sectors. And then again, Shake, you're kind of getting in the more technical aspect of why those things are kind of all moving in.
Yeah, I mean, well, the story. Well, if you think about the story, we heard all March, April, May. It was when the 10-year was on the rise, which is technically bad for growth stocks. Investors' risk for appetite is much smaller when the 10 years is raging like crazy. So now we're seeing it break down. That just plays another story into that growth stocks could be coming back very soon. I think that's going to be the case personally.
Nice. All right. Well, I think it's probably our longest market outlook segment we've ever done. So I think we covered it all. If you want to get in some of the top ideas.
Yeah.
All right. So first one, I just want to ask you for NVAX, which is one of your
Nova.
One of the names on your shakedown that was up 13% today, if you had a little input on that.
I mean, this goes right back into the whole Delta variant thing. People are getting scared about Corona again. 40% of hospitalizations in the UK are from vaccinated people. So for them to see another lockdown, that would be pretty, it wouldn't be out of the question. It's not, it's not logic-based decisions. It's fucking politicians, making these moves. So you can never question anything out like that. So Novavax, obviously big Corona stock, had a nice little base down here, and this thing just exploded off support. Buying through 192 today, you're 10% of the money. That thing looks amazing.
All right, so a few that haven't gone yet, or actually I guess this has to kind of go a little bit today. I think this was one of the alerts that went off.
Yeah, man. I called this out today at like $44, $45 when it was turning around. I didn't do shit with it, but I think that this is a new high growth company, recent IPO. I really like this one going forward. You had to buy it pretty close to support, 44, 45 today, but definitely a name we want to key on for another setup. Can't buy it up here at this point because you got to give it too much risk, but definitely keeping a close eye on this one.
All right, next up is this Twilio, TWLO.
Would you look at that? A growth stock. Bullish engulfing name after the gap down. I mean, that's exactly the sort of strength you want to see. I don't want to buy it here, but look, I want to cue in. I want to cue in on these names that are showing the most strength and eventually buy them when they set up a little better. I think you had to buy this one pretty early on, and it was a difficult buy this morning off the open with everything getting cracked for the first time. But I definitely think this is a name we cue in on.
All right, next up we have this PCTY.
Yeah, hell yeah. Similar setup, tech, software name. Software was really strong today. It was so nice to see that when I was just going through charts a second ago. This one looks really good. Honestly, I mean, you probably look to buy this one through today's highs, but it stopped today's lows. If it wants to continue on, really nice little flag developing there on the daily chart. So I think that one looks pretty good.
Nice. And then one more we got is ADSK. Another software name.
Retesting that, huge macro level. Yeah, at some point, I mean, you buy through today's highs, 290. That looks really good. It's just a retest of this huge macro chart, macro wedge. So, it goes back up to 290. Could look for an entry.
Mm-hmm. Nice. All right, so I went through a couple again, I took off the shakedowns. Is there any other ones you want to go over?
Yeah, I mean, definitely Amazon. This has been leading the market. We saw the Qs turn around late in the day. It's just coming out of such a huge macro pattern, and then it broke out. It had a great breakout, and then it just so quickly retested the level, and then found that bind once again. So I'm looking for a down open tomorrow, so I could buy a couple things in the hole, and this would definitely be the top of the list.
So there was maybe last week's book, the Stan Weinstein book. His big thing was on these all-time high breakouts is obviously you have to take that first time through 35.50. Like you have to buy that first breakout because you don't know if it's going to go or if it's not.
Right.
But he says one of the best
Setups.
re-entries is that when it comes back and retests that prior breakout level, like we call them like the sneaky buyback.
Right.
Like when it comes back down into here, sets back up, and maybe you have to buy it first 3,400, but then you get that next follow through move. Obviously the goal is for it to put it new all time highs, but this is like that sneaky entry that he mentions that he was one of his favorite buys.
Right, and the best part about these buys is a lot of the times, one, there aren't too many eyes on it, and two, you get actually a much tighter risk entry than the first time it goes after the level. So I mean, it had a very tight candle today as it retested. Buy through today's highs, stop at lows, is a much tighter risk trade than the first time it went when you had to give it like $200 or whatever it was.
Mm-hmm. That's even like the Zebra, the ZBRA was one where I actually missed it through 520, and now it's it went to 30 points or whatever. It came right back. It's under 520 again, and this is again, I missed the initial buy, but now back up through 520 again. I can find that tighter risk entry where that first time was 520 versus 480. Now if it pulls back in, say versus 500 or 490 and turns back up through 520, I'll have a little bit tighter risk in that similar kind of setup, like through all-time highs coming back and giving us that rebuy. Any other ones you want to go over?
Nah, that's pretty much it.
All right, so the only two that I'm keeping a close eye on is first is this Rocket RCKT. This one again is still holding up versus that 42, which is like that pivot low in this stage one base. Even I kind of got shooken out of a little bit because I got in a little too early last week, but you can still kind of buy through this 45, but really the textbook entry is up through this 48. So I'm just going to kind of give this thing a little bit more time and not trying to get, worked out of it before it even goes.
Yeah.
And the other one is again this Gilead. Big base through that 70, still holding up versus that 67. In this biotech name we mentioned before, biotech is still flagging, looking good. And this one has been setting up for quite some time, so I don't expect this to go tomorrow or the next day. But this is a big macro pattern. There's no reason why through 70 this can't be back up in the 80s, and then eventually work its way back up to those prior highs in the hundreds. So that's the two kind of main focus I have for the time being.
Like it.
All right, so with that, Cheek, want to get in a good mat trade?
Surely. Let me go first. So, market's a little. Market was a little volatile last week. So what I do during these times when I don't want to put on big swing trades is I'll gravitate towards the some recent IPOs. So I was in this DDL, and you'll see how I traded it. I was looking for a bounce off support. It took out this prior IPO low and reversed. So that cued me into thinking it could reverse even further. We look on, this is a 4-hour chart I got so you can see it, the chart's tight. I'll tell you the mistake I made. So I was buying up through 24. My mistake was that, in these type of setups, you have to see the stock explode off lows in a recent IPO. I shouldn't have held onto the stock. This is the following day where I got out. I shouldn't have held onto my full size because it didn't close strong enough. You need to see sort of a short squeeze happen at those lows. You want to see a really feisty move. You want to see buyers cementing that they're winning right here because you're going counter trend at the end of the day. So it was a tight loss. I lost like 75 cents, but I don't think I should have really lost anything in it. And then the other one was this DOCS, DOCS. This is a good trade. So let's see. So we saw it come down. All right, huge move initially off the IPO, pulls in. There's actually an alert for that trade right here off this 47.50 the first time. Pulls in again, gives us another opportunity. Then this is the first time I bought it to that 50, and I pretty much just kicked it all that first day, just trying to scalp a win out. But then Friday it came down to that 51. It retested the high of this candle, and it just flagged out. And the buyers showed their face so well. I actually bought it back late Friday, and then today I was just kicking into strength. While we got it, we weren't sure how the market was going to close and things like that. So. Small win, small loss there with the DOCS and DDL, but definitely looking to shrink the time frame when it's hyper volatile and things like that. So that was really what I accomplished last week. What you doing over there?
All right, so first one I'm going to pull up is Apple. So again, this is kind of going back to when we talked earlier in the market outlook about, when it gets the retest, it often looks as perfect as it can be, but typically stocks and sectors and markers tend to get met resistant at that retest. So as Apple was a name we had been in for the last couple of months, and we got a nice little good add through 128 up in beginning of June, and as I got up to this retest area, I took some profits. Again, I still have some, but had to take some into that retest, and again did push a couple points higher, and now we see it's back below that retest, and now that easy kind of up moving, and Apple might be kind of changing course for the time being, and that's why we tend to look to take some profits into that retest. So that was just kind of looking back at a trade that I got out of that did go a few bucks higher, but now again it's back below. So just why we focus on the retest. And then the bad one is this DRI, and more so because someone brought this up. They want to buy it recently, and me having been in it for not so long, but for the last few months, just watching them every day, knowing that this is probably not the time for it to be in it given the move it had. And this was just a bad trade that I had a pretty bad feeling initially, and I had to kind of work myself out of the position and made some money in it, but it was a horrible trade from a risk reward standpoint, and I just had to get out when it just wasn't able to break that 150. And same with Apple. This was that retest of that prior all-time high. We can see back in March it hit 150. Back, months later it finally gets back up there, and it just isn't ready for it to really break out and go. So I had to just kind of move on from the name, take the this tiny gain and move on. And another member wanted to get in through 150, and I'm like, just give it some time. Like, it's not really ready yet. And again, we don't know the market's going to pull back, but as it does, this pulls back into support. And now this is a perfect name that if it comes down into this lower 130 area, there are plenty of areas to buy up through support with a better price versus trying to be perfect up in those 148, 150 area. So this was the first trade was pretty bad, and hopefully we can get a better entry as it kind of rounds out near support in time if it does set up. Okay. So that's what I got for the week.
All right, good stuff.
All right, so with that, we got book of the week.
Book of the week. Earnings season coming up, baby. Time to get paid. I do this first week of earnings season. Every season, I go and read How to Make Money in Stocks. I go to read the fundamental chapters where it talks about exactly what we're looking for out of earnings, out of the growth stocks, what makes a great earnings great. It's pretty simple, but he just maps it out so well. It talks about accelerating growth, things of that nature. So, highly, highly, highly recommend everyone goes out and reads just those few chapters on How to Make Money in Stocks. William J. O'Neill. Very, very, very important for earnings season.
It's a classic book. Actually, it was one of the members today. It was like, what's the first book you'd recommend to read? And it was that exact book. It's like, just start there. It's classic. Right. So I'm reading an older book. Not really older, I guess, but Peter Lynch, Beating the Street. This is talking about, he ran the Magellan Fund, one of the best mutual funds, kind of in history, and just kind of going through again. We talk about like trying to keep your position size under 15 names, where at one point this guy had probably 1,000 different stocks in his portfolio. Again, the guy was managing billions and billions of dollars, so a little different from his side, but a lot of his nothing really from a trading standpoint because he was really building out portfolios, but definitely some nuggets of wisdom. Why to avoid margin, why to focus on leaders, do your own research. There's really no shortcuts. Like his, he was beating 2 to 3 different CEOs or corporate executives every single day for multiple years, and that was basically his process of how he kind of came across stocks and talk with analysts. Where now that's not really a thing. Right. But interesting book, again, not really relevant as much to what we do, but again, there's always some wisdom to get from guys like this, like Peter Lynch. His first book though, One Up on Wall Street, that's a classic. That's a really good one. Yeah. This is like one of his second or third books, but still a good one.
All right, cool.
So that's all. Is that it? Then we wrapped it up.
Wrap that thing up.
Oh, hold on. So, how are we supposed to do this basketball tournament?
That is
because I have.
Gonna be interesting.
I've gotten I have a couple members so far that are like ready to go, but they're all in different states. Right. So I don't know how we're going to.
Listen, we'll start in New York and we'll figure it out from there.
All right. So what is it? Next Friday, I'm versing you.
Oh, you don't want that smoke.
Well, it's in 2-on-2. Me and the accountant versus you and I forgot who your guy was.
Oh, my guy was out in Denver, my buddy Wyatt. But I'll have to recruit some New York homies to get in. More importantly, the turf's getting put in this week. We're having a big slip and slide day Saturday, so I expect you in attendance.
I'll make sure I'll be there.
All right. Give us a little like, a little question, subscribe, all that good bullshit. See you guys next week.